Someone I respect a lot. He's a great teacher, a great analyst. And we've done streams before. We've done stuff like that. But let's just get right to it. We have chart guys from Twitter, Chartman Dan. Let's get my screen up here. The chart guys, you definitely want to check him out on Twitter. If you click on that link, chart guys, it will take you right here to his webpage. He's also, I would say, incredibly prolific on YouTube. He pretty much streams every day, and he's got a great team kind of behind him. Someone you definitely want to check out. Real quick, if you don't know, I'm Big Cheds on Twitter. Ched's Trading on YouTube. Check out the playlists. The spaces are great. These are conversations I've been doing on Twitter, uploading them here. Check out the quick market updates. That's where this video will go. Check out the free version of my book, Trading Wisdom. I just put lesson 17 up yesterday. That's the free version of my good reminder. So what's up? Why don't you spit for us a little bit here? I'll bring up your screen. Why don't you just kind of roll through, tell us how you're feeling, what you're seeing, if you don't mind, and maybe we'll just go from there.
Yeah, we'll do a little broader market analysis here of everything, bigger picture, and then I want to talk about RSI. That's been a nice topic that you keep touching base on, and I can give a little bit more in depth of how I utilize it, and I think that'll be a good discussion from here as well. So I got Bitcoin on the weekly time frame. People always want to know, is the bottom in? And I always want to make trading as simple as possible. I want to make clear statements. So for me, if the weekly EMA 12, which is the red line, if that is resistance, I cannot be bullish Bitcoin as far as the bigger picture bottom. And if we just shoot up from here, I would say, oh, I missed that move, and I have zero regrets about that. Because probability-wise, I look at this setup, and of course, there's always a 1% chance, 10% chance, a low probability that the less likely scenario will play out. But if you see that a chart is rejecting from a resistance line time and time again, and we've rejected probably 4 or 5 of the last 6 times, you just can't be bullish. So get over weekly EMA 12, and we can talk about maybe a longer-term temporary bottom or permanent bottom, whatever you want to call it. Then that discussion is open. But if the weekly EMA 12 is resistance, then it's not even a question for me. I can't have any confidence that a bottom was in because we're just setting lower highs. We topped out and set a lower high at 25.2, and then we topped out most recently another lower high at 22.8 thousand. And I know yourself and myself as well, we're very heavy into price trends and using those concrete levels, not having the subjectivity of trend lines and things like that. And so if the lower highs keep forming, we are bearish.
Where's our higher low, brother? That's the name of the game, right?
Absolutely. We tried to form one here, and technically, we're still holding 18.5, barely holding on at this point. So there are a couple of short-term levels from the last couple of months that we're watching, but again, we would need a big reversal in sentiment as well because the broader stock market is still extremely weak, and it is correlated hand in hand. You can see the Nasdaq already broke the low of the last couple of weeks. Bitcoin has not done so yet, but it's knocking on the door of doing so. And we are just, again, not seeing any type of trend follow through as far as higher lows and higher highs. We had a big old bounce in stocks for a couple months, but we never confirmed the weekly trend change. We were missing that higher low and higher high that establishes supports, that tilts the scales between supply and demand. And yes, it was a big bounce, but we're in the process of giving back most of that. So again, just not really bullish in stocks and not bullish in crypto, and just patiently waiting, mostly cash, and waiting for that signal, knowing that I don't need to nail the bottom. I can wait until trends change and have the momentum at my back and be a lot more favorable in terms of risk-reward entries for the bulls, and we're just not there yet.
What about like commodities? Are you kind of watching any of those?
Yeah, I'm watching the dollar. The dollar's playing a big role here. It's getting more and more popular with people watching it this past year. And it's the same thing. If the weekly EMA 12, this red line, if that is support on the dollar, it's bullish. It's
hit Alt I, right, on the keyboard.
Alt I, that's new to me. What's that do?
Do it.
Invert.
Boom, now it looks like Bitcoin Weekly, right?
Exactly. Yes.
That's awesome. Invert, man. I do that to challenge my bias sometimes. It's pretty
definitely useful. That's a good tip. I didn't know you could do it that easily. Good to know. But yeah, so if weekly EMA 12, there's an inverse relationship between the dollar. I pretty much just do commodities, crypto, and stocks are over here, and the dollar's over here. And if the dollar has weekly EMA 12 as support, it is bullish, and it's really hard to be bullish the things on the other side because they have this inverse relationship. So gold's been getting smacked. Silver's holding up better than gold recently. I'm watching to see if that relative strength can keep up. But commodities in general, I mean, oil's been dropping for months at this point, so it's dollar strength and its weakness most everywhere else at this point. And little pockets of strength. Atom is the cryptocurrency to keep showing its relative strength, but there are far more bears, and so trend is your friend, and bears are having a good time of it in 2022.
I think a lot of our viewers are like, crypto guys. So what do you think about Ethereum too? I mean, we talk about Bitcoin, and we've had, Ethereum versus Bitcoin, Ethereum versus the dollar. Tell us what you think here.
So yeah, Ethereum's got a key support approaching as well. The weekly time frame. So I view how we just played out as a solid bounce off the 100% plus gains. That's a solid opportunity. Can we change the weekly trend with a higher low and high? Pull back. Here's our high and low. We failed to break the 2031 top. We had to have broken that level for an uptrend. So we failed, and now we're testing this low right now. And if 1420 breaks, that is just a continuation of lower highs and lower lows.
What do you think? Would you buy there like 1280? Just off, 1420? What do you think? Top of like a daily ascending triangle maybe?
I would be, if we could see, if we broke 1420 and start, I like looking for wedges, you know that as well. Yeah. And so wedges for me show a sign of exhaustion in one direction. So if we start breaking supports and lacking follow through, and what I mean by that, what's a lack and follow through? If we break 1420 and go straight into a daily bounce, then okay, I start paying attention. Like, okay, the bear break didn't see much follow through. We're still in a weekly and a daily downtrend, so I'm not getting aggressive as a bull, but I'm paying attention a little bit more. I say, okay, we broke straight into a bounce. That shows me not a lot of bear conviction and follow through, so I'm watching for that other direction. But as far as targets, you know, I'm not really one that looks and says, at this price level, I'll be interested, because there's many different ways we can get there. We can get there in a straight drop. We can get there in bear flag after bear flag. We can get there and the broader market and the dollar are doing something different. So I can, you know, say, all right, I might get interested in 1250, but then once we get to 1250, it's not an automatic buy for me. That just means, all right, now look at everything else and see if things are aligning for a good risk reward trade.
So do you ever set low ball bids then? I mean, it sounds like maybe not, because you want to kind of see the price action when you get there.
Yeah, I don't. Honestly, I've got too much PTSD from 2017, where you could see, I mean, the lack of liquidity. It's definitely a much more liquid market these days with a larger market cap. But back then, I mean, if you set a bid, sometimes you could be 10% below where the price is, and you could still be put in a very bad position if you're not near the computer. So that ingrained in me that I need to be near the computer to be in the zone. Essentially, if I'm trading, and the analogy that I give is if I'm a marathon runner, I don't get to choose when the marathon is. I train for it to be set. If I'm a trader, I choose when I trade. And I can choose the times when everything is all aligned. If before the marathon I twist my ankle or I eat some bad sushi and I don't feel like running because I'm not my 100%, sorry, you got to run it. But as a trader, no. Like, oh, I didn't get good sleep last night. I don't have to trade today. I'm not 100%. So I want to be at my computer. I want my comfortable setup. I want my monitors, and that's when I'm 100%. Anything less than that, and I'm not giving 100% effort. I can still trade, but I just have to start with the base understanding this is not my ideal situation.
So you're choosing your battles, right?
Exactly.
Are you doing like alerts to know like when the price gets to certain levels? Do you ever do any of that? Like, you know, your phone rings, okay, we're getting close to an area, or you just kind of mark it on the chart and kind of just watch it? You know, do you have any triggers?
Yeah, I'll use some alerts. One of the things when we dive into RSI a little bit more is I like when RSI is at absolute extremes, but on a lot of time frames together. So daily's oversold, the 4 hours in the low 20s, the hourly just dropped to the teens, the 15-minute, the 5 minutes. When you're aligned like that, we call that a super stack, where you're stacking all these time frames. That's when I'm starting to get interested in buying into fear and weakness, because that's when we're in free fall, sky is falling mode, and that's where we were when we dropped on the initial break of 20,000 down to 17.5, and then had a nice rally from there. But that was when all time frames were aligning in extremes, and that's one of the only times that I will look bullish based on RSI in a downtrending market, when you're at those extremes on all those time frames.
You want to talk about it, brother? You want to get into RSI or what?
Yeah, let's do it. So, so with RSI, you think about RSI a lot, and it's a conflicting thing, because I read tweets, and it's like, oh man, I love the RSI. It's made me so much money over the years. But who you are talking to and your audience that you are talking to, it's good information, because you've got a lot of newer traders in their first year or two, and to utilize the RSI successfully, you need to be a bit more advanced in the game. And you need to be, you know, you get into trouble when RSI is your first thing. If you look at RSI is oversold, I'm going to buy. No. RSI is like step 3 or 4. So I need to know the most important things, which are, what are the price trends? Are we in a downtrend on the weekly? Are we in a downtrend on the daily? What's the prevailing trend? If we are in a prevailing downtrend, using the RSI in oversold conditions is dangerous. It's not a good indication. The only time I'll use RSI as a bullish signal in a downtrending market is a scenario I just described. We are at historical extremes on a lot of RSI levels. How do I know historical extremes? I can scroll back on the chart and look at previous times. But again, I want all those time frames oversold, because you can be oversold on the daily, but if you're not oversold on the hourly, you might just be an hourly bear flag. It's about to see another leg down. So that for me is the only time I will look bullish due to RSI in a downtrending market. The best time to use RSI is in a trending market and in the direction of the trend. So an example is, I'll use the S&P 500 as an example. The S&P 500 is in a daily and a weekly downtrend right now. Yesterday, we saw a bit of a bounce, and that bounce from the low of the day yesterday, this is the 5-minute time frame, solid bounce, 390 to 394, that's over a 1% gain. But you zoom out, we know we're in an hourly downtrend. We know the result of that bounce is most likely to be an hourly lower high. One of the pieces of the puzzle. So that's my baseline understanding. Okay, we're in a daily, weekly downtrend. We're bouncing on the hourly from just about oversold conditions, but I know that anything under the high of the day, 395, 96 is just an hourly lower high. So I've now gone through a checklist. Okay, I know where the trends are. I know what the most likely scenario is on the hourly time frame. Then I get to RSI, and I can use it as a bear. RSI hit 70 on the 5-minute time frame for the first time on the day, and that marked our hourly lower high. That marked the peak for the bulls, the best top of the bounce that they saw for hours, and then we rolled over into the slow and continued the trend, the prevailing downtrend on the hourly time frame. So I call these backburner trades, and I got a whole video on YouTube with these YouTube trend guys backburners. But essentially, in a strong trending market, you look for the first RSI level. So in this instance, this is the first 5-minute RSI being at 70 in a couple days. So we look for that to be a potential bearish signal. Again, I'm not just blindly buying or not just blindly shorting because the 5-minute RSI is 70. I am using it as a piece of the puzzle and establishing the trade game plan. Okay, we hit 70. Maybe I'll short a little at 390, 430, and I'll have one more order a little bit higher. I love scaling in and scaling out.
Yep.
I'm not an all or none trader. Because
You want to tell us about that? For those who don't understand, that's a big point. What do you mean by that, Dan?
So early on, I realized I should not expect that I'm going to nail tops and bottoms of the market. Sometimes I do, it's great, but it's not the majority. It's the minority of the time that will happen. So I scale in and scale out where I will break up the dollar, the size of the position. Let's say I want to have 1 Bitcoin for a short. I will look to either buy half a Bitcoin at this level and then half a Bitcoin a bit higher, or I can break it down even further, 0.3, 0.3, 0.3. And what that allows for is a little bit of wiggle room and a little bit of breathing room. And that doesn't mean just scaling blindly and that next thing you know you're in the hole because the trade's going against you. It's establishing part of the trade game plan. So if I'm in half of a Bitcoin, just making up numbers, short at 20,000 and another half short at 20.4 thousand, my break even is now 20.2. I can do the math. Okay, 20.2 is my break even. If we get up to 21,000, what's the size of my loss there? Is that too big of a loss? Is that an acceptable loss? What's my target? Is my target 18,000? So my risk is $600 before I stop out, and my potential reward is multiple $1,000s to the downside. It's just establishing the trade game plan to ensure the risk and the reward are properly aligned, and you always want more potential reward than potential risk. And scaling in, it just allows for, again, not needing to nail the top. Because if I use all the capital I want for the trade, and I enter, and it keeps going up a bit, now I'm playing defense, and I'm in the hole, and I'm sweating a little bit. I got to place my stop loss, and it's just much harder. It's much easier to stop out if you've only got one position. So play around with it, because this is a huge level up in my trading, and crypto was a big aspect of that after the 2017-2018 run. 2017, I was all in market buying new highs, and it would follow through, and it was a thing of beauty. But those are not normal market conditions, and so I've talked to myself and many traders where changing from one order only to scaling in has been a game changer.
So are you just staying on RSI, and you had a couple other questions that just jumped up from what you were talking. I want to ask you also about, like, are you trying to just trade with reversals, continuations, breakouts, and stuff in that, but still on RSI, are you using it all for divergence? I don't think I've ever really seen you talk about that. Is that
good observation? I don't, and it's definitely, plenty of traders do, so I know that there is potential use there. So I'll never look at something that I don't do and say you shouldn't do this, because there's a successful trader doing it somewhere. Someone's using EG clouds really well and living their life on it. And so for me, I know that there's enough legitimate traders that use divergence that it can be useful. But for me personally, it's really not telling me things that I'm not getting elsewhere from price trend. For me, when I say a lack of follow through, and I'm looking, we say we got a bounce, and we see a higher high with a lack of follow through trading the consolidation, I'm scouting a rising wedge, showing me bulls are tiring, and that's when a trader would look and say, oh, there's RSI divergence here as well, because the price is still going up and the RSI is dropping. So it's just a different way to visualize some of the same information. And I just haven't found it useful. And I'm in the point in my career where I want to be simplifying things rather than adding on. First year or two, absolutely. Add on new things, play around, and just realize that a lot of that stuff is going to be on the chopping block that you eliminate later. I used to have tons of MAs, the Bollinger Bands. I used to have all this on my charts, and I just slowly, as time went on over the years, just eliminated them because I was getting information elsewhere, and it was just not really giving me much to be going off of.
That's a great point. I think you got to find what works for you. You start with a lot of things. You kind of trim it down. And with RSI, one of my biggest, concerns is the divergence. So I'm glad you're not using it. I mean, it's a bounded oscillator. It has a fixed limit. So people look for the lower high. That's most of the time it's a false signal. Like I like to use on-balance volume. Did you ever use stochastic RSI as well? Obviously, you don't want to use both. So did you ever...
I did have. I did early in my career, and then again, I just saw there's these two things now under my chart, and they're telling me the same thing. Why I don't need both of them, so I eliminated it.
That's a great point. So it's amazing because two of the things I rave about are integral to your style: RSI and diagonal lines, right? So can we talk a little bit how you're playing those those wedge breakouts? Are you looking for horizontal, like a higher low or lower high for confluence that it breaks as well, or how aggressive are you just triggering based on a diagonal break alone?
So again, it's never primary. It's always down the list. So what's the overall price trend? So I've got on the screen right now Coinbase, which is a company I'm not a fan of, but I shorted them yesterday. And so I was watching this price action on the morning where we had a big bull move on the morning, and then we had a big pullback that was in part due to a group coming out saying, hey, we're shorting coin. That had an impact as well as the broader market weakness. And so on this bounce here, I was scouting 15-minute lower high. Because for me, we held a low today. Anything under the high of the day is a 15-minute lower high. And so I'm watching this bounce, and I'm always zoomed in for the details. If I'm looking for a 15-minute lower high as a result of the bounce, I'm going to the 2 minutes. Because the 2 minutes in an uptrend when that 15-minute bounce is happening. And the loss of that 2-minute uptrend is the first indication that your 15-minute lower high is being set. So I would say if you're going to utilize RSI or wedges or just trading in general, the two most important aspects are understanding how price levels dictate trends, and then understanding how the different time frames relate to each other. And a loss of the 2-minute uptrend on a bounce is a 15-minute lower high being set. That's a standard that you can use. It's obviously not every single time, but as far as guidance, it's a good one. And I've got a image here, and I'll tweet this out after we're done here, but this is just a bit of a guide in terms of which time frames relate to the other time frames, and you're not going to be able to understand this looking at it. It's going to be confusing, but I'll break it down. I'll do a little video after this. I'll do a video explaining what this means.
You better.
Yeah. So back to the example, I'm scouting a coin 15-minute lower high. I zoom in, and I look for clues that the 2-minute uptrend is being lost. And so I start to say, okay, here's our higher high on the 2-minute, and it goes straight to a pullback. And then we got another higher high, and it's going straight into a pullback. So whenever I see that, it shows me, okay, bulls are starting to lose a little bit of their momentum. And so at this point in time, I had this just a visual guide. I'm not really often basing things off of the trend lines only. Again, it's always in conjunction with other things. So I'm watching for weakness on this 2-minute time frame to show me the 15-minute lower high is being set. And I also have, back to the 15-minute, always cycling through these time frames, I have 15-minute EMA 12. I'm looking for a bounce, and if we reject the 15-minute EMA 12, I know it is a overall weak bounce. So I've got an EMA resistance, I've got a 2-minute trend that is my guide, and I've got signs that that trend is starting to slow a little bit. Because we're not seeing increasing volume here at this point. You know, the initial move, there's some decent little bull volume there, but you know, our next legs up, there's nothing in terms of volume standing out for the bulls. So we break this rising wedge bearish, and our 15-minute lower high is set. And so my short was 78.50s or so, right up in there. And I exit half on the bear break, and now my stop just goes over that high, and I'm risk-free. And I let it play out, and I eventually stopped out of some of that position because we did see the bulls hold the low, and it did follow through a bit from there, but I positioned myself in a trade I could not lose. We're either going to roll over into the new low today, and I'm going to have a big win, or the bulls are going to save it, which they did temporarily, and I exited that portion of the trade to break even. So I love getting in break-even scenarios, and I do that through partial positions. So,
that's brilliant. Do you want to talk about that a little bit more?
Yeah, so as soon as I sell half, if it's in profit, so again, let's just go scale in, scale out. I scale in Bitcoin, 20,000 and 20.4 thousand, and I'm looking short. And I've got a break-even of 20.2. And I like using the same position sizes so I can just do the math in my head, nice and easy. But if that's harder for you, you can have a calculator. I definitely take that for granted that I do simple math well in my head. It's an aspect of trading that when you're on the fly is very helpful, but a calculator can help as well. So I got my two positions, break even 20.2. We start to pull back. Now on that pullback, it's possible, let's just say I'm shorting for a 4-hour lower high. It's possible we hold the recent low. So if I want to be defensive and conservative, I will take half of my profit at, let's say, 19.8. So 20.2 average, 19.8 I exit half. My break even is now 20.6. And in an ideal world, we topped out right around 20.6 or lower. So our lower high on the 4-hour is set. We pull back, I take half of my profit. And if I'm wrong, I stop out at 20.6, break even. If we never get back to 20.6 and we keep rolling over, I've got a good position. So selling half to change your cost basis of what break even is what I do as a more conservative mindset in my trading, but just always remaining in, once you break even, the psychological burden that is released, and it's just, you are in absolute control, and it's a very freeing feeling.
I love it. I mean, you never want to let a trade own you, right? Own your mental space. You want to be able to go do stuff. You want to be able to sleep and not worry about it. So I really want to encourage people to listen to those words. I totally agree. I think that's brilliant. So what are we doing here, man? You know, what do we think? I mean, it's a pretty bearish macro environment, but still we have to trade the data that's in front of us, which is historical, right? So, you know, what are we doing?
I mean, I'm sticking, like I said, I like simple mindset. And so after we had the bearish reaction to CPI numbers earlier this week, and again, if you're a crypto trader, more and more, because these correlations, you got to be paying attention to the Fed, you got to be paying attention to this fundamental data, or at least aware of when it's coming out, because we know when volatility is coming. We knew that Tuesday morning, we were going to see volatility. It could have been a big bull move up, a big bull move down, but we had not seen a daily trend change off of the lows. We were extended to the upside. And so the CPI numbers come out and we get a huge jump in response to that. So I have a mindset right now with, I am just not looking bullish until bulls give me a reason to look bullish. I'm just shorting the lower high. So if we start, weak on the morning, let's just say, and Bitcoin's dropping here, I'm just patiently waiting for a 12-hour lower high. Right now, Bitcoin has been setting a lower high every single 12-hour candle since the CPI reaction. And so if I'm looking for swing trade, I'm just saying, if we keep dropping from here, I'm not going to be in the trade and I'll miss some profit. That's fine. But I don't like the risk to reward for a swing bearish entry at these levels. But the next time we bounce on the 12-hour, anything under 22.8 is a lower high. So I'm going to anticipate that a 12-hour lower high is the most likely scenario. And then from there, I will look to establish a short swing position and I'll use the shorter term time frame. So the first indication that a 12-hour lower high is being set is a loss of an hourly uptrend. So the 12-hour bounce will likely start with an hourly uptrend. So again, it's the understanding how all these different time frames interact with each other and overlap with each other, and establishing most likely scenarios, and then determining on your microscope, how far am I zooming in? Am I zooming in to the hourly? Am I zooming into the 5-minute? And that's important as well. If you're a swing trader, the 5-minute time frame doesn't really matter a whole lot to you.
Right.
That's going to be taking up your brain space, and it's going to be potentially confusing you. Keep it simple. If I'm
looking
looking
at
now. Yeah, if I'm looking at a longer term time frame.
Sorry, Ethereum just broke that low.
Oh, did it?
Boom. 1410. Sorry, I'm watching live. I'm kind of a degen like you. We see it. It's exciting. I wanted to ask, sorry to interrupt. So yeah, so you're, just to reiterate a point I think you're making, there's not a trade here, but if you wanted to short, you need to bounce first. You need to bounce into what you anticipate being a lower high using classical charting. When the price is approaching what is a likely maybe lower high area, you're switching to lower time frames, which is the proper time to do that. And you're using that multi-time frame analysis to help you time your entry. You're managing your risk properly by scaling in. You understand when your idea fails. Is that generally describing your approach?
Yep, you got it down. And oftentimes, if I don't have a clear price level where my idea fails, it's a dollar amount. So I like to have a dollar amount where this is my day maker, this is my goal for the day. And if I lose that amount, I'm done for the day. So I don't spiral into going on tilt and having blowing up. Oh, there goes my weekly profit. So
we talked about that. I've had you on before. How do you handle these tough losses, Dan? What do you do to kind of reset?
Definitely get off the damn screen. You gotta get out in nature. It's just such an easy way to reset and remember what's important. If you've got a family, go hang out with your kids. That's way more important than what's happening on the chart. Get out in nature, calm your mind, and just approach it, as a reset. Okay, I made a big mistake. Things have to change. I need to change my routine, whether that's my sleep schedule, my exercise habits. Discipline is so important as a trader, and it's not like I need to be disciplined in my trading. I need to be disciplined in my life and apply that to trading. And so if I need to change something, I need to change my lifestyle to help change my trading and my results and my routines in my trading. So after a big loss, I take a step back, I take some time off, I hit the reset button because you do not want to be coasting off those emotions. Again, you lose a poker hand and you start going on tilt. I need to make that money back, and you're aggressive and you're risking your money more. And that's the absolute last thing you want to be doing. You want to call timeout. If you're in the NBA and the other team goes on a 10-0 run and they are just rolling, you call a timeout to break their momentum. So you call a timeout in your trading to break the bearish negative cycle mindset. And you go out in nature, you reassess what's most important, you establish a game plan. I need to do this, this, and this to improve. When I get back, I've got the motivation to do it, and I'm going to start from scratch. I'm going to leave that loss behind. I'm going to learn from it. I'm going to reflect on what my issues were, but I'm not going to take that loss with me when I come back to the screen.
I love it. Let's just quickly switch gears. What are you planting this fall, Dan?
Yeah, so this fall, I've got greens going now, so salad, spinach, and collards and kale and all that. That's the easier stuff that is a bit cold tolerant. And I have a little greenhouse that doesn't really do a great job, but it provides some frost protection. But I'm just looking forward. The leaves are just starting to slowly fall on some of the trees here. So really looking forward to the shift in the season. How about you?
Yeah, I actually just planted a couple raspberry bushes. I've got like a kind of a lower light area. I tried blueberries that weren't doing great, so I'm putting some raspberry bushes in. And most of the planting will be in the spring. I'm doing roses and stuff like that. But yeah, I'm trying to get some raspberries, man. Those are doing okay in the low light. I have tall trees around me, so it makes gardening a little bit more difficult,
I had some blueberries die out this year, and I'm going to replace them with raspberries, so we're on the same page.
Oh, that's excellent. All right, so let's see. What about ATOM? We got a question about that. And folks, we won't be going for that much longer, because I know Dan's got stuff to do. We're honored to have him here. You got to make sure to follow him. But if you want to ask a question, maybe we'll get a couple of those in here. We do have a great guest. What do you think about ATOM, Dan?
So Adam, honestly, I still don't know what this coin does, and I don't care what it does.
Me too.
But over and over again this year, it's consistently showing us relative strength where, it's not going to be able to surge huge gains on its own, but it holds up really well in the bear environment. And then once Bitcoin gets a bit of a bounce going, it heads higher. And so we do have, a significant amount of follow through. It's a completely different looking weekly chart than what I just had up on Bitcoin. This is quick comparison here. That's Bitcoin with weekly EMA 12 rejections and hovering around its lows. And that's Atom up near its high of the entire bounce and still up over 200% from its lows, so right around that. And so whatever's going on with Atom, people are, the supply and demand, so the demand for Atom is outweighing the supply. And when you see weakness in Big Daddy Bitcoin, that leads to the bots and the algos trading off that correlation, and they're adding downward pressure. And this is showing us that if Atom is disregarding the weakness in Bitcoin, the demand for Atom is exceeding what the bots and the algos are selling in correlation with Bitcoin, if that makes sense. So whenever I love the pairing charts, Atom BTC shows us that we are testing right now the strongest that Atom has been comparative to Bitcoin in the last many months. And this is actually a pretty key little zone right here, but if we were to clear it, we could say that we are the strongest we've been comparative to Bitcoin in the last 7 months, which is a prolonged period of time. That's very notable, and it's again consistent. Look at the EMA 12. I love the EMA 12, but we grind along it and hold it. We hold it again, we hold it again, and we hold it again. And so that's a great visual guide. We can say that Atom is likely to maintain its relative strength against Bitcoin as long as the Atom BTC chart, which is up right now, has weekly or daily, this is the daily, EMA 12 support. That's a great visual guide. And I love watching this and saying, again, keeping it simple, we're in an uptrend. If this EMA 12 is lost, something is different from what we've seen over the last 2 months. It's a shift in the market environment, and we need to recognize that shift because the same things we've been doing in the previous market environment are not going to work the same way in the shifting market environment.
So how do you separate, Atom's bullish, for USD and definitely versus Bitcoin. Are you able to play this chart knowing how bearish Bitcoin is, or are you able to just say, I'm just playing this chart and I'm going to focus on the 4 corners, of this chart?
I align it. So I'll say, okay, I know Bitcoin's weak, but if Bitcoin is shaping up, or maybe, this hourly bounce is shaping up, and if Bitcoin sees an hourly bounce from here, even if Bitcoin's just going to bounce and set an hourly lower high, but that bounce, Atom is positioned really well to benefit from it. So Atom could go up, 5% for the Bitcoin's 1.5% bounce. So I will always reference Bitcoin, because if Bitcoin's about to fall through support, I don't want to be longing Atom, because even though it's stronger, it will still be impacted negatively by that support break on Bitcoin. So it's aligning with, I wouldn't long Bitcoin in this spot, but I'll long the stronger coin because it has a much stronger relative relationship.
What else is strong? I mean, I don't know. What do you think about QLC? Have you seen this one at all?
I have not.
Well, let's see. What do I have QLC on? Let me see. I have it on Binance. There's some history there.
Yep. Yeah, that's definitely it's definitely a low liquidity coin. I can see that just by if a coin in 2 days is going up 120%. Yeah. There's low liquidity there. So just roughly, I always want to look at the dollar volume. So if we're trading 100 million coins at 4 cents, that's $4 million. So we're trading roughly $20 million on the day. So that's enough for me. I like to have a base. If something's trading less than $5 million a day, I don't care what it's doing. It's just not enough liquidity and volume for me. But if I'm, if I want to be, this is the kind of name that I'd be day trading. So if I'm looking for that volatility and Bitcoin's boring and there's not much going on, then this is the kind. Keep an eye out. So Backburner, I mentioned Backburner and RSI. Keep an eye out for this coin. What happens when when RSI hits 5-minute oversold conditions for the first time? Because I can scroll back here on this bull run and I can see in this bullish environment with uptrend, 5-minute RSI is marking these longer-term higher lows. And it's only because this is in such a bullish market environment and it's in an uptrend, a daily uptrend, and it just went significantly higher. So that's the environment. If we have a trend, a strong trend, and it's an uptrend, I'll use first 5-minute oversold conditions to scout an hourly higher low. Again, it's not just blindly assuming that it will happen. It's scaling in a couple entries. It's putting a stop where my dollar risk is acceptable. I'm willing to risk this much on the trade, and looking for 5-minute oversold to mark a longer term higher low. And this is just a good example where QLC has been doing that on this bull run over the last couple of days.
Not much out there in terms of relative strength right now. It's a tough spot. And
how do you? I want to interrupt. How do you utilize RSI?
I don't use it. I've deleted it. I get it, and just the point you made. Like there's Ichimoku traders who can trade circles around me, and I totally understand that. I just don't. I use the on-balance volume, but most of the time I don't use any of that. I'm looking at just key moving averages like you. I'm using the 8 EMA, using the 12. I'm looking at key horizontal levels, and I'm using like Japanese candlestick signals with the Bollinger Bands. Like Ethereum just had a tweezer top at the upper Bollinger, so I was looking for weakness. Just so many ways to crack an egg, and you got to find the way that works for you. And that's what's great about the space. There's no one way to do it. If there was, I mean, there'd be no edge. There'd be no edge for anyone. So I just don't use the RSI. Maybe I will listen to you. Maybe I'll take another look at it.
Honestly, I would say just reserve it. If you don't want to use it now, absolutely don't. But next time we're in a very trending market, I mean, when we're in Blue Sky Breakout, if I don't want to be chasing, I'm buying the first 5-minute oversold or the first hourly oversold.
Right.
And that's when I call it my anti-FOMO trades where, all right, I missed the breakout on this one, but on the consolidation, when we're looking for an hourly high or low, I'll buy first 5-minute oversold. And that keeps you patient as well.
I mean, you know what you're doing. And when I talk about it, it's like, I see people with a daily, oh, it's RSI is oversold. I'm going to buy here. But, the only way to get oversold is to be bearish, and trends tend to continue. So it's like, I don't want to buy, something bearish. So it's true. A lot of what I say is geared towards newer traders. What about, are you doing any Forex? I don't know that I've ever really seen you talk about that.
No Forex. The next place I dive into will be futures. I'm not a futures trader at this point, but I do envy the swing trading aspect of the futures market, where if I want to swing trade stocks, I got to worry about gap up, gap down, all that.
Yeah.
So futures will be next for me.
What do you want to wrap up with there, man? Anything you want to say to the people before we send them on their way?
Just big gratitude for everybody that's following along. And in this market environment, again, this year is tricky. There's obviously the bears are in control for the most part, but there's swings in both directions. And just be patient with yourself. This game takes years and years, and it's capital preservation right now. If you're struggling to trade, stop trading and then focus solely on education. And if you focus, I say this so many times, but the amount of traders and chart guys that did well in the 2017 run-up and did very poorly and learned all their lessons and learned they didn't know what they were doing on the pullback down in 2018, 2019, they learned, they focused on education, and they smashed it in 2021. So we know we go through these cycles. There's going to be another bull cycle eventually. So prepare for it and focus on your education and go through Ched's content and his books and our YouTube content, and just make that, when I was learning, it was my full-time job. I said, all right, 6 hours today, I am focusing on learning. I'm going to go through this content, and I'm going to go down the rabbit hole of that key, and I'm going to learn about what Bollinger Bands do, and just establish your own criteria, not your roadmap, your own roadmap of education, and treat it seriously, but not too seriously because it is flashing numbers on the screen. And you got a new book coming out, right? When's that coming?
Yeah, book 3, Trading Quotes. I'm editing it right now. I'd say by Christmas, maybe a little bit sooner. Appreciate you asking about that. It's going to be super fun. Dan, why don't you show us like your group, or kind of just give us a little bit of a pitch, show us what you've got.
Yeah, so if you're new, I always, I'm not a salesman by any means. I love that we have a bunch of free content, because it's always go check out our free content if you want to dive in deeper. Then we got more. We've got courses. We've got our chat room. I'll pull up the chat room right now, where we just got a bunch of traders. We got 1,000+ traders from all over the world, and just sharing a bunch of information, just constantly stuff going on.
Yeah.
But as far as the website, go to our website. And if you're newer to technical analysis, we've got an intro course for free. So technical analysis intro course, take that as your baseline starting point. And then from there, explore your content, explore our content. We definitely have a lot of similarities, some differences, but I think that we both don't succumb to price predictions and our emotions. And that's the 2 most important things in staying in this game long term.
What about your YouTube? Where do I start? Because you've got like 1 trillion videos on your YouTube.
We really do. That's the other thing. If you want to go back and watch every single video from the 2017, 2018 market, we've got them all there. Where you can go back and look, what was Dan doing on this day?
Yep.
But go check out, my favorite one, honestly, is Market Psychology and Trading Lifestyle. This playlist.
Okay.
There's a ton of good stuff there. How to trade with patience. How is trading like surfing? Just all these analogies, bigger picture. Before you zoom into the details and the trends and all that, you got to have the right headspace. And it's the less talked about aspect of trading that is the hardest aspect of trading. And one of my favorite ones that I put out recently was looking back at psychology and mindset of a trader. And I just go back at, these are all the books that I read in my early 20s that helped shape who I am as a person. None of them with reference to trading at the time, but in hindsight, all of them absolutely built the foundational layer of the psychology that allowed for me to succeed as a trader.
I love it, man. Folks, I mean, for my people, you can see why I'm a big fan of Chartman Dan. He's prolific, he's honest, he's experienced, and he's a great teacher. So, big recommendation from this end. You got to check out everything this guy does.
Appreciate it, Chad. We'll leave it here with a little dancing hit.
I love it. I appreciate you, man. Hope you have a great rest of the day, great weekend and all that, all right?
You too, brother. Love you.
Love you too, man. Take care, bro. All right, let's get this wrapped up. Thanks again, Dan. Let's get this wrapped up. Of course, Big Chad's on Twitter. Chad's Trading YouTube. My YouTube feels empty now, looking at all his YouTube stuff. But what I can say is there's a free version of my book, Trading Wisdom. Check that out. I just did lesson 17. That's the book that's available on Amazon in 4 formats. It's got great reviews. I'd encourage you to check that out. This market update will go under quick market updates, and I'm probably going to add it to the long form interview series as well. just check that stuff out. If you want to check out Bitcoin Live, I'm a founding analyst. I've been doing market updates there for over 4 years, twice a week. I'm sick. I'm on vacation. I stop and I do an update. So I'd encourage you to check that out. I would encourage you to take your trading seriously. You're going to get out of it what you put in. Nobody picks up a guitar and can play Stairway to Heaven right away. So it's up to you how much you're going to get out of this. Expect the journey to be difficult and long, but if you are disciplined, if you take care of your mind, you take care of your body, and you manage your risk, right? Cut your losers, add your winners, and the rest is history. So that's from me to you, and for my good buddy Dan as well. Folks, thank you so much. Finish it off with some dancing, and I'll wish everyone a great weekend. So let's get that music back up here.
Best stocks to trade during a market sell-off. In this video, we're going to tell you why these names are still your go-to for day traders in a downward accelerating market. During portions of increased volatility, you want to make sure you're trading liquid names that have volume, all kinds of ways that you can control your downside risk. You're not as worried about those crazy sharp moves where you can't get out. Looking at the big board, you've got the big names here in big cap tech, Apple, Microsoft, Alphabet, Amazon, Tesla. You can be sure that when we have movement, these names are going to be worthy of your attention. When the market gets moving, you don't care about as a trader whether it's up or down. When it's to that downside, you want to play the trend. So understanding relative strength is going to be key to any trader's successful transition in a moving market. So understand RSI, it is an oscillator, it is a lagging indicator, but you can glean from this where the trends might be. Simple look at when you have support at that 40 on that oscillator, you can get some bounces and identify that trend to the upside and then work off of those. It works in both directions. But if you're trying to go against the grain in a volatile market, it's not going to work for you. The trend is your friend. Well, if you're trading stocks, you want something that is going to move with the market so that you can express that trade. And that brings us to beta. And what is beta? This is a volatility measure. And you want to see a security's beta versus the overall market. How closely does it follow that market? If it's closer, then if it gets to that 1 or above that 1, it's more volatile than the S&P 500. The closer to 1, then you know it's tracking the index. If you're looking to express moves in the overall market within equities, understanding beta is going to be one of your keys. You don't want something that's moving on its own, unless that is your intention, of course. When you're trying to get outsized moves in a volatile market, sometimes you want to ensure that you have both a catalyst, which is always a good thing, and relative volume. You're not going to get those bigger moves that outpace the market unless a stock is doing more volume than it typically does. So you're going to ask yourself, how do I size up? Because you understand there are more eyeballs in that trade, there are more people that are interested in it. And why does it matter? Because volume drives the markets. If nobody's looking at it, nobody's going to trade it. You're not going to get the big wins. So what is R-vol? R-vol is simply a ratio that calculates the current volume to an average volume over a set time period. So you can understand on that day, is the stock doing more volume than normal? In that hour, is the stock doing more volume than normal? Those are going to be good reasons to get into a trade. And on top of that, why you might want to size up because it's a better opportunity with more upside or downside. So I've just talked about increased volume and catalyst. Well, here's an example from today when I'm shooting this video. Rumors that Pinterest is being bought by Google or could be bought by Google. We get increased volume that's much larger than what we saw for the rest of the day. We have an explosive move to the upside. These are the types of names that you want to identify and then trade through. So to sum up, you need to have the leaders leading. If you want to express moves in the market,
in 30 minutes, right? So we can try to do a approach. Is this but oh yeah, so it has to be something like this. Already. So we're getting somewhere. Please die. Okay, so that's cool. So as you can see, it doesn't disappear because, yeah, so when you die, one life does not disappear immediately. This is because it is literally that projectile that we moved in here. So what we have to do now, is we have to set the proj dx. We have to constantly set proj dx to be, well, that's very interesting. We have to direct it towards the anchor somewhere. All right. Update.